The 200K portfolio is a 40 strategy portfolio, made an equity peak yesterday, Monday, March the 15th, 2021, up 19K on the month, 17K in February, 10K in January. Most consistent portfolio this year. It has only 3 Nasdaq strategies out of 40 systems. Nasdaq has been more challenging this year. We have some really a few strategies that do really well in the Nasdaq, while many of them have not done as well. And so this portfolio right here is less affected by the Nasdaq because it is a lot of market diversity. You see market and sector diversity in this because you include the stock index futures, E-mini S&P, E-mini Nasdaq, but it also includes gold, it includes silver, crude oil, soybeans, RBOB, and so some of those major commodity markets. We have SR Counter Trend 3. The SR Counter Trends have done really well this year. They rebounded from last year. We anticipated that. The SR Counter Trend 3s have done well. And so you don't see as many of the new strategies in this. So it's got a flavor of longer term strategies. It has gap continuation in reverse. It includes VIX OC and 60-minute breakout A. And so those are some of the new strategies for 2021 that we've implemented. But most of these are strategies from the past. And once again, we only have 3 Nasdaq strategies with a wide range of market diversity. There's 40 strategies. Let's look at the equity curve and drawdown curve. Here is the equity curve, and the drawdown curve is very strong patterns in the drawdown curve as we peg equity peaks. You see here the historical performance as well. 6 figures every year, and pretty strong year 2018. Very consistent though. I love the consistency of the average annual profits in this portfolio setup as well. So it does require more capital to trade this. It can't really be traded in the micros because the lowest common denominator of micros is different. For example, crude oil only has a mini contract, which is half a big contract. So you'd need at least a 5 micros on the stock indexes in gold to the mini crude oil contract. And then others like silver, they have a 1/5 of a contract. So the ratios for micros does not line up to really do this that well in the micros. It has to be traded on the full contracts. I mean, it could be traded on the micros, but some of these, such as, there's only one RBOB strategy, so you could leave out RBOB. You could trade different ratios. For example, silver has a 1/5 contract. Soybeans has a 1/5 contract, so you could do 2 of those 1/5 contracts, which would be equivalent to 4 micros, or you could trade 3 of those, which would be 6 micros on the stock indexes in gold. But that is the 200K portfolio equity peak. Let's go over the others through Monday, March the 15th. The all 78 is all the strategies, and it's having a strong month as well. Up 41K. It had a slow start to the year. But it's making its way back up towards these equity peaks. You see the drawdown here, and then it's making its way back up to equity peaks. And strong day so far on Tuesday, March the 16th, and we'll see how that plays out at the close. Here's the All Strategy Access shortlist, 51, some of our favorite strategies going into 2021. That does not include any of the new strategies. So none of the new strategies, just 51 of the strategies from 2020 that don't include any of the new strategies. It is up on the year, 22K, $2,500 away from an equity peak, pretty consistent as well. Really consistently cyclical equity curve. And then we include a 51 plus 7, which is 51, which is this portfolio right here with 7 new strategies. And you can see that's at equity peaks as well. 46K on the year, strong month, 33.9, 33. And you see that it did make a worst case drawdown. We do expect portfolios to degrade over time and make worst case drawdowns as volatility increases. And so it's good to get in on a drawdown so that if it makes a worst case drawdown, your risk from equity peak to worst case drawdown is already, you don't capture that full risk if you start in a drawdown. If you start at an equity peak and then you get out right at the worst case drawdown, I mean, it's going to eventually happen. So it's not a good place to start at an equity peak. It's a good place. It's good to get set up and then start trading on a drawdown stock index portfolio. Stock indexes and gold have been weaker so far this year because Nasdaq has been so challenging with extremely wild volatility. We see 1 minute moves that are over $1,000 per contract on the Nasdaq, and so it's up on the year, but barely, I guess, in relation to the volatility. It's barely up 9,600. You see it making a worst case drawdown here and then rebounding. Prime example of why you need to start at a drawdown to weather worst case drawdowns, because of increased volatility can cause that. We've already went over the 20K, 200K portfolio. 50K portfolio is strong this year as well after a slow start. In January, February, and March, very strong. $1,400 away from a new equity peak. And you see how it's made new equity peaks recently as it's come up here to make these new equity peaks recently. And then we have the micro stock index and micro gold, which can be traded with the regular contracts, and it is halfway into a worst case drawdown. So it's a good place to start this one. It's up today as well, 1952 out of a 4309 worst case drawdown. It did make a worst case drawdown. It's a very slow start on the year, one of the slower starters because of all the volatility of the Nasdaq. You see the equity curve has kind of gone flat, and you see it made a worst case drawdown here. VIX is dropping below 20 today though, so we'll see if we resume normal market mode since 2009, or if we're going to go into a bear market. We haven't had the only smooth trend in the stock indexes has been the uptrend. There have been very little smooth downtrends, and we need a market. If we're going to trade long and short, we can't have the short side be so wild that it's not even tradable ever. And so that's what we've experienced with all the dip buying and liquidity in the market. So this is the portfolio calculator through March the 15th. I will be uploading it to the website, and you can go over this if you're new to reviewing this information. This is basically a combined end-of-day equity analysis of a list of algorithms. And you can see all the algorithms right here, and you can customize this if you want. What you want to do is you want to highlight this and hit the delete button, and then you want to come in here and you want to highlight all of these and hit the delete button. And then you can add contracts. We use 0.1 for micros on the stock indexes. Like I said, on others, you can't necessarily do a 0.1 on crude oil. You can only do a 0.5 on silver and soybeans. You can only do a 0.2, 0.4, and those increments. But in gold and stock indexes, you can do 0.1. So that is how you would manage this and set it up. If you're doing a custom setup, you could play with this tool as well. Download it and play with this and see if you can make it work. So that's the update for today, halfway through the trade on March the 16th, 2021.